Okay, let's go over our weekly market recap for March 11, 2024. The number one headline from last week is gold hits its record high as it surged more than 4% for the week to a record high of 2,200 an ounce on Friday afternoon. Welcome to the all-time high party gold. As the dollar weakened, gold ran global equities outperformed, and so did the bond market, while the S&P 500, Dow Jones, and NASDAQ were all negative for the week. Number two headline of the week is Chairman Powell's cautious tone at the testimony before Congress. Now, he reiterated that they will cut interest rates some point this year. However, they're going to wait to see a little bit more data. Well, tell us something we don't already know. Chairman Powell. The market reaction for this was that there's still a 97% chance that there's going to be no action, no rate cuts at the next meeting next Wednesday on March 20th. All right, headline number three is the jobs number that came out on Friday, and it's basically steady. They came out higher than expected at 270,000 jobs for the month. However, the previous 2 months were both revised downward. Okay, now let's take a look at the last year's number jobs growth. And as you can see from the chart, the jobs are there, but they are being revised lower, but it's still satisfactory enough job growth, and the unemployment rate is holding. It did tick up from 3.8 to 3.9, but this is going to continue to keep the Fed at bay. All right, let's go over the top three market movers for this week. On Tuesday, we get the all-important consumer price index for February. On Thursday, we get the producer price index from February. If you remember from last month, both of them came in hotter than expected. And so we'll see if that is a new trend moving forward or if that was just a one-off for last month. We also get retail sales on Thursday. And then Friday, we get consumer sentiment for March. Now, remember, the Fed is in a blackout period, so they're not going to be able to talk before their next Fed meeting, which is next week on Wednesday. All right, let's look at some of the corporate earnings for this week. The two big ones are Oracle on Monday and Adobe on Thursday. We also do get quite a few retail earnings, so we'll get to see how the consumer is doing throughout the week. All right, let's take a look at our short-term chart for the equity S&P 500. As you remember, we've been adding since November 7th, and so far so good. The market has just been going straight line up, and the year-to-date performance is at 7.6 for the S&P 500. All right, let's take a look at the bonds. Well, we switched back to add mode. We did go to protect mode. It was a false breakdown, and now we're heading back on the upside for bonds. So we are back purchasing, looking to buy bonds. On the year-to-date performance, though, we're still negative, just slightly for bonds, but we'll see what the market's going to do on the bond side. All right, that's it for this week. Thank you for joining us. Our next update is Monday, March 18th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.